Well, let's switch the conversation now to the bond market. Of course, the federal government is raising 60 billion naira in bonds on Wednesday next week. Thankfully, a no lockdown can hold that back. And this is coming after the 100 billion naira Dangote cement bond issue, which everyone now expects to be listed any moment from now. But here with us to look at the yield curve of the debt market is the head of investment management at Quadros Asset Management, Bolahon. Aina, good morning and thank you for coming on the program.
Good morning. Thanks for having me.
So let's start from the rear now. Dangote Cement's 100 billion naira bond issue saw the close of its book building on Tuesday, and of course, folks are waiting for the outcome of the subscription. So tell us how the exercise panned out and what are we to expect next?
Okay, so it was a massive success. Dangote wanted to raise 100 billion. Dangote Cement, they have a 300 billion program, and of course, the first tranche was 100 billion. They're trying to, one, expand their capacity and also to refinance some of their short-term loan. So Dangote has always been new to the debt market, but they've been on the short-term debt market. So currently, they had about 300 billion in commercial papers. In 2018 alone, they raised about 150 billion. So this is like their debut issuance into the bond market. And they're going to raise, like I said, 100 billion. But in terms of subscription, we had about 140 billion that fell within the ban. But it closed on Tuesday, like you said. Funding is today. So it closed at 12.5. It's a 5-year bond. It's a senior unsecured fixed bond.
Now, today being the settlement date now, how much of liquidity will this bring to the financial market generally?
Well, there's a lot of liquidity in the system. As a close of work yesterday, over 300 billion was in the system. Earlier in the week, we had about 600 billion in the system. And a lot of pension funds, traditional asset managers, they have funds and they're looking for where to deploy it to. So I'm not surprised that was a massive success. There was a T-bill auction on Wednesday as well. That as well was massively subscribed, despite the fact that the yields were low. So I think people are looking for returns. And of course, when people say returns, capital always follow returns.
Now, we understand that there were retail participation in the exercise. Now, do you think that such investors will be able to look that way this period of the lockdown and, of course, the uncertainties that come with it?
Oh, definitely. So from what we've seen from our own end, some people have long-term funds and looking for where to deploy it to. So for some of them, they're looking for alternative. So bond, for a lot of them, is an alternative. And what bond does for you is that it helps you to like immunize your portfolio. So what I mean is that you have a 5-year obligation. You can buy a bond that's 5-year, and so you know that you don't need to worry. You're sure that you're perfectly immunized for that period of time. And to come back to Dangote as well, you know Dangote is the biggest company on the stock exchange. So I wasn't surprised that it was massively subscribed. Dangote is rated AA+ by GCL and also rated A by Moody's as well. In terms of operation, Dangote is actually in 10 African countries. And from 7 of those countries, it has like a query to customer operation. So that means it's a full value chain, the manufacturing, sales, and distribution. So Dangote is massive. In stock capacity is about 4.5 million tons. While everybody might not be able to do that this COVID-19 period, but of course, because of who Dangote is, I'm sure it was able to have a successful bond insurance.
Any idea of what the proceeds would be used for?
Yes, so majorly, like I said, they want to refinance existing short-term loan. And some of those loans are for expansion. Expansion is a long-term project. So really, if you are using a short-term loan to fund long-term, it's a mismatch. So they are refinancing some of their short-term loan. Also for working capital. So for some of their working capital to pay some receivables. So basically to refinance and also for working capital. And they also mentioned some of the company's operations at this point in time.
Now, analysts have said that on completion of the Dangote cement bonds, now the outstanding non-sovereign bonds would hit the 1 trillion naira psychological mark. Now, what's the implication of this for the capital market?
So I think it just gives people options. It gives people an array of options. So the more products you have or the more issues you have, capital can be deployed into those bonds. For a lot of pension funds about 10 trillion in assets. Pension fund is long-term. So really, bond issuance, either corporate, sovereign, or subnational, are like a target asset class. Sorry. So it gives analysts an array of options to invest.
Now, the shares of Dangote Cement has, since that exercise, it's been rising, of course,
yeah.
And it has moderated its year-to-date losses, giving its 13.7% dividend yield, and that's based on the final dividend of 60 naira per share. How are investors and traders warming up for that? Well, the qualification date should be May the 25th.
Yeah, qualification date is still May. But this week, like you rightly said, we saw a lot of renewed interest in Dangote. It's been rallying, although it slowed down yesterday. Dangote has actually been oversold. That means the price has actually come so low. It came down to as low as about 111. And of course, I think it was a good support price. So a lot of bargain hunters were just picking the stock at that price.
So looking at it generally now, what's the debt markets looking like lately in terms of demand and supply as well as yields, which appear to have been falling this period?
Well, so there's still a lot of interest. Why we are not seeing so much from FPIs? FPIs are the foreign portfolio investors. Of course, for obvious reasons, there's a risk-off sentiment that, okay, there might be a devaluation. Like you rightly said earlier, the segment earlier, Moody's one affirmed the B2 rating. S&P downgraded us in February. Fitch also downgraded us as well. So really, Nigeria is not investment grade. And for a lot of investors, in terms of their investment guideline, some of them can only invest in investment grade. So we've seen sell-offs across the curve. So what we are seeing basically now is activities of traditional asset managers and pension funds, and there's a lot of liquidity in the system. So because demand is going into those bonds, that's why we're seeing the yields fall.
But typically, dealers and investors are not always comfortable with lower rates. So what's the outlook for the market?
Well, so really, it's two things. Would you rather have the money in cash or will you invest it? So yes, the rate is lower, but there are no options, right? So you have to deploy it somewhere. The equity market is a bit risky, so people rather stay in cash at this point in time. And I was surprised when I saw the bond auction. For instance, 90-day, we had oversubscription, despite the fact that it closed below 2%. It closed about 1.93%. For the 180-day as well, it closed 2.2%. It was massively oversubscribed. The 1 year closed at 4%, and we saw subscription to the tune of 90 billion. So like I said, there's a lot of capital looking for avenues to be deployed.
Now let's talk about the OMO auction this week. Now tell us about the experience and, of course, its impact on the markets.
Yeah, so in terms of OMO option as well, it was massively subscribed across the curve. We saw oversubscription for the 90, 180-day, and 360-day. And of course, the rate was between 11% and 12.5%. There was OMO maturity yesterday. We have another OMO maturity next week, about 360 billion. So while we're not seeing some activities by the FPIs, but we're seeing activities from the banks in the OMO space. But like you know, CBN has cut off traditional asset managers from participating in OMO. So people like us cannot participate in OMO, but just the banks and the FPIs. But in terms of subscription level, it was still massively oversubscribed.
Now, looking forward now, of course, there's the bonds primary auction, primary market auction of next week, where 60 billion naira is to be offered across board. What direction do you see the rates turning to?
Yes, I think yields might drop a bit. So last month, we had two new issuances. The 30-year was issued at 12.98 marginal rate. There was a 15-year bond as well that was issued at 12.5 marginal rate. When the DMO was going to issue those bonds, they're going to issue 5 billion for 5 years, 20 billion for the 15-year, and 30 billion for the 30-year. But everything was massively oversubscribed. And if you look at the direction of yields, yields have been falling. We still expect to see a lot of reinvestment next week. Like I said, we have over 300 billion maturing in OMO next week. We expect some of those maturities to go back to the debt market. And
Moody's affirmed its negative outlook on Nigeria yesterday and sounds quite positive about the domestic debt capital market. Do you agree with their projections?
Yeah, so the issue with the domestic market is that Nigeria and CBN, we can really, we have that covered. So if you need to print Naira, or if you're issuing debt in that currency, you don't have control over the dollar inflow. And that's why we've seen a lot of sell-offs in the Eurobond market. For the debt market, there's no problem with federal government paying back. The issue is if you have issued bond in a foreign currency, because it has to be based on your availability of dollars. So really for debt market, domestic debts, I think Nigeria is comfortable. I think they can meet all their obligations as when they fall due.
So what's your outlook for the market generally?
Yeah, so for the Eurobond markets, which is the foreign markets, right, we're seeing yields increase significantly, and of course because of sell-off by a lot of FPIs, a lot of portfolio managers, and because of the risk of sentiment on Nigeria. But for the domestic markets, we're still going to see a lot of play. I think going forward, we might see yields rise at some point. And if you look at the deficit for Nigeria in terms of budget, was currently about 2 trillion, but with the reduced budgets, it's gone to about 4 trillion. That needs to be financed by debt somehow, and I believe they're going to use local debt. And of course, if there's aggressive borrowing by the federal government, that also speaks to the fact that yields is going to rise. So in the short term, because there's still a lot of capital, yields might come down, but going forward, if you see aggressive borrowing, yields might rise up a bit.
Are you expecting to see any effect of the lockdown on the markets?
Well, so far, there hasn't been so much effect because trading is still going as usual. People can buy their stocks, people can buy their bonds. But at some point, during season like this, people want to have a lot of cash. And you might see people trying to probably redeem their funds and stay in cash or probably put some money in the bank because really cash is king at this point. There's so much uncertainty. So for now, I think we are good. But if it persists for a long period of time, people might begin to wind down their investment and probably stay in cash.
Well, we're hoping that it doesn't persist for a long period of time.
We hope so.
Thank you. Bola Aino, Head of Investment Management at Codrus Asset Management. Thanks for coming on the program.